Welcome back. Hello, hello, hello. Welcome back. So finally, again, I did a video and something happened on my screen, so I have to do this all over again. But anyway, we're back on US 30. It's been a minute before I actually put another video on US 30 because technically I wouldn't have been saying anything different because there really wasn't any movement. But we finally got some movement in this area here. And so let's see what happens. So we definitely, my bias is still for that target of 29.75, I think it is. But we do see that looks like we're trying to sell a little bit. I'm looking for this area here to get broken and to at least continue back up to 28,000. And then once this area is broken, I'm looking for us to come back up at least to this major structure high. And hopefully that level gets broken and we can continue in the uptrend according to my bias. But let's determine how we could have caught this move up, and then I'll talk about how we could have caught this move down. Okay, so on the 1 hour, we have our nice level of a demand zone. We have our 27.5 psychological quarter level right here, which has been respected and then broken. So let's go down to the 15-minute time frame. So from a 15-minute perspective, we see that price is broken. It's come all the way down and it has created another low and another psychological low, 27.5. So once we come down to this area, this is something, a little nugget that maybe will help you as far as entries are concerned and actually when to enter the market. Usually it happens on the second higher low or the third higher low. People usually enter on the first higher low, which is okay, and you get a better risk to reward. But sometimes it can be a little tricky because price can, you can enter in this buy right here on the second high low, and then it just kind of moves up and then it continues to fall. So most people wait until actual structure has been broken to actually confirm that the trend has actually changed into a buying trend instead of the selling trend. So prices come down. This is the first leg of the W. Here's the apex here, and here's the second leg of the W where most people would enter, and then they would put their stops either below, a little bit below 27.5 or below the previous low, and then we'll just waited it out. And we have a nice confluence area here. We have a nice reversal pattern in Morning Star, a bullish engulfing that has engulfed the previous two candles, and rejection at the zone and at the 27.5 level. So then price comes back up to this level and breaks its apex. So okay, we're looking pretty good, but then it comes back down. Instead of making another higher low, it comes back down and breaks into the apex, back down into the previous higher low. So technically it's a retest. But as far as entries are concerned, if you've missed this particular entry, you could have gotten in at this entry here because of the twins. The family has stepped into the market and given me an entry to enter. So you could have entered right here. I have another video on entries and how to enter the market and knowing when to enter. And technically, you would say, well, okay, well, this is the second higher low. Actually, it's not necessarily a second higher low because it has come back down to retest the previous higher low. So technically, I kind of call this one higher low. It's just a set. Then price comes back up and does another retest. And you have a set of twins up here if you want to take a sell. And you have a set of twins up here if you want to take a sell. One kid is a little bit older and bigger than the other one. I would have taken it because this whole setup here with the two candles is a reversal pattern as well. So you could have taken it down. So what happens? Price comes back down and now it creates a higher low. This would be the third one, or technically this would be the second one if you're counting these two as one higher low itself. And what happens? Price makes an impulsive move all the way up. And so that's just something to remember. Something that I've picked up on is that once you reach a high or a low, it's usually the second higher low or the second lower high where the impulsive move is made. If not the second, it's usually the third. And if it is the third, it's usually because price has done a retest. So this could be considered actually the first higher low, comes back up, retests here, then makes the second higher low. And so there your entry would have been, it could have been actually, I would say, at the engulfing of this candle here. As you see, price has come down and create a level of support. Some people would have actually gotten in right here because it's a bullish candle. You have these two wicks, but you would have had a little bit of a drawdown. And then as you notice, that price came back down, and actually the candles did not close above this level of support here. And understanding price action, it's very important to actually just wait within this. It's a 15-minute chart, so the candles are actually giving you all the information that you need in order to enter the market, and it's telling you what's going on. And here's the key: that price is most likely going to reverse once you see the institutions making their moves. And how do you know an institution has made the move? When you see big bearish or bullish, depending on your direction, candles falling straight down, falling hard, but falling or being pushed into a level of support and resistance. In this particular case, it's being pushed hard and falling and dropping hard into a level of support, into a level of demand, to a psychological level, 27.5 here. So that's an indication. What are they doing? The institutions are inducing sellers. They're inducing what they call dumb money. They're inducing the retail traders to sell. We look at this and say, oh my gosh, the market's falling. It's been falling from before. I need to get in on the sell. And that's what they want you to do. They want you not to think about what's really going on. So you have to look at what's going on. Yes, it's falling, but where's it falling to? Are we close to a level? Sure, you could have caught some pips here, but you want to catch what I call the move. I'm not really a scalper. I'm more of a swing trader. You can say day trading as well, but I like to hold my trades for a couple of days, if not even just for one day. So I like to catch what I call the move. And so this would not be the move for me, because you can look back and see that it has been falling for some time. So there should be some type of pullback or retracement. And so what they do, they push it down. And then when they start making the first higher low, and then they come back up into a nice sensitive area, which is where they began the push in the first place. And then look what happens. They push it down again. You see these strong bearish candles where being pushed down into another sensitive level of support, another level of demand where their liquidity is at. So they're inducing sellers again. So sellers looking at this whole impulsive move here, saying, okay, this is just a pullback. We have a reversal again, and then we have another strong push again. Just remember, when you're seeing strong push being pushed close to levels of support or resistance, it's likely that price is going to reverse. So you want to start thinking from the other side of the screen. You want to start thinking from what the banks and the institutions and what they're thinking. And so when you see again, you see these levels, you see these hard pushes, understand that as you're selling, as the retail traders are selling, as the dumb money is selling, they are placing their buys. And they're just going to turn the market. And here, once it comes down to this nice level, they're telling you what's going to happen. How are they telling you? You may not have touched the zone, maybe prick it a little bit. You may not have touched 27.5, but there's rejection at that level. And it's still higher than the previous low. So they're letting you know the selling pressure is over, even though they're giving you a lot of bearish indication that the selling pressure is not. The selling pressure is over. It has created a higher low compared to the previous lower low, and it created the twins. It gives you the wicks. So there's your indication that, okay, you can enter the trade once this bullish candle has closed. You could have entered the trade, and then what happens? It pushes back up into the next sensitive level of resistance where the institutions again has made the move. And what does it do? It prints some more twins. So it's not ready yet. It's not ready. They're not ready to make that move. They still need some more contracts. They still need some more money. They need that dumb money. They need the retail traders. They're going to let them know, you know what? This is a double top. This is an M. Let's take it down again. And that's what they do. But notice here how the candles are not as strong as big as before. Big, big here, big here, but there's not that much momentum here. Interesting, right? Then what happens, it gives you a nice little reversal pattern. You see some nice wicks here. So, okay, you get in here. Not a problem. See, this hasn't happened yet. But then all of a sudden, you don't see what I call a follow-up candle. The next candle is a doji. So that should tell you something. You stop and think. And not that your entry is wrong. Entry is okay because it's pretty much the second higher low. But it's not quite ready to make that push. And it's not making the push. So what does price do? It comes back down and then you see a nice momentum shift. Another institutional move back down towards the level of support. 27.5 in the zone, but it doesn't quite make it. You're looking at your bullish candle you got in that. You see the level of support here. You see the level of support that actually was here, was rejection here. But the institutions, they stop right at that level. Then your next candle is bullish. It's like a doji. Looks like an indecision. But guess what? Just like here, there was no follow-up candle confirming the bullish action. There's no follow-up candle here confirming the bearish action. Stop and think. It closes. It's closing at support. It didn't even close below support. Yes, it wicked below, but the candle itself, price has closed above and sitting right there on support. So now the support has become validated because we have this candle sitting at support. We have this candle showing that this level is actually valid because it is resistance. So now it has returned into support. And then you wait, possibly, this is an aggressive entry. You don't get in here. You wait for the next candle. This closes. It wicks through, but it closes above support. It's bullish, engulfing for the previous candle, and even above the candle itself. That would be your entry. So technically, this would be your third higher low. I'm going to say, let me reverse that. Technically, it would not be your third. It will be your second rather, because since this one actually came down, this is your first one. This one came down, did a retest. I particularly count this as one higher low. So you had three entries in order to get in and catch this complete push. But usually it's on the second high low, which the push happens. Second or third, whichever way you want to look at it, it's completely relative. If you don't make it by the second, you will make it by the third. Or you want to call these two one, this will be the second one. And you see what happens. Now, the actual conservative confirmed entry would be once this level here, once where the institutions was pushing down, this level here, once it was broken and retested, then your entry would have been here. And when I say broken and retested, you see how price broke it here and then came back down. This would have been an aggressive entry, but hey, it's higher than the previous low. So you could have gotten right there. But when it's actually broken, this move here, and it's come down, and then you have a reversal pattern here, and then you have a bullish engulfing as well, and you have some twins right here. This would have been your confirmed conservative entry. So there are two types of traders. There are the aggressive traders, which will have gotten in pretty much somewhere down here, or then you have your conservative traders, which would have gotten in up here. And let's just draw out where that would have been. Okay, and then prices, steadily going up, making up. I'm waiting for price to come back in here. I am in this trade, just not on trading view, and that's pretty much it. So it's the same process with selling. So let's look at it from the selling perspective. Of course, as we look back in my previous videos, this was the previous high. This is the previous lower, higher low. Price come back up into a psychological level. Again, look at these bullish candles, just strong bullish candles coming back up into a psychological level to a sublime zone, 28,000. Comes back up, and what happens? It starts some rejection. So this is the first higher low up in here, and then it drops. Then it comes back up. Here's your second higher low, and actually creates a market pattern, which is a a double top or M formation. So you could have gotten in here with the reversal, or you could have gotten here at the reversal. Then it drops and it breaks the apex of the M. And you're like, okay, cool. So now what you're looking for is another lower high and then another lower low. But what happens is it comes back up into the previous level of resistance, same way that the buy did when I was showing you on the M15 time frame. So it's almost like a reset. So it comes back up into this area. You'll see this nice bullish pressure here. I mean bearish pressure, and you will probably take the trade, and you'll see that it comes back up, and you'll get a little bit of drawdown. Hopefully, if you're using your stop loss, you're going to put your stop loss above the previous high, or either some pips above this previous wick right here. So if you would have waited it out, he would have came back up in this area. You got some twins here as far as what's concerned, and then you have a reversal, and then you would have taken it down, and then you would have noticed that in this area here, the prices come down to 27,750, and it's created a higher low. Okay, then it comes back up and it creates a lower high. This is the reset. So now this is the lower high, and you're looking for a lower low, but then it comes back down and does another one. It does a retest. It does the same thing that was happening on the bullish, right? So this is the retest. This is the first one, first lower high, comes back down and retest. Here's your second lower high. And like I said, in true to form, on the second lower high, you have the push down. And that's what happened. So understanding that usually it's the second lower high or higher low where the impulsive move happens. The second or the third, depending on how you're reading the charts. Understanding, if it comes back up into the same area, that's can be considered one, it can be considered two, or it can be considered a reset. It's all how you read the charts. But either way, look for the twins, look for the reversal patterns. This is a zone right here, which I'm waiting for price to come back up into. If you don't know, I just right click add alert, and you type pretty much anything you want to put in here. I have it going to my phone, on my TradingView app, and also my computer. It's going to alert me that once price touches this particular zone, I'm going to start to look to see what's going to happen here. Is it going to be some type of selling pressure, or is it going to be break this level here and go to my 28,000? So that's what I'm looking for. What I'm hoping is going to happen is that you probably will get some selling pressure here, and what it will do is create a lower high, a higher low rather, and then break through. So we'll see what happens. But finally, we get some movement in US 30, and I'm happy about that. If you have any questions, feel free to respond and comment inside of the TradingView video. Rewind the video to look at entries and how you should take the entries. It takes some patience, it takes some waiting. All of this right here, all this consolidation took a heck of a long time. It made me start looking at a few other pairs, to be honest with you, because I just didn't know whether or not when this thing was going to move. But just be patient and just wait. And the time that you're using to be patient, analyze the charts, use price action, analyze the candles. Each candle is a fight between the bears and the bulls, and the candles are going to tell you who has won. So you look at this candle here and you'll say, okay, well, this is a strong bullish candle, but then the next one was bearish. There's no follow-up candle, and then it printed those wicks, the twins, and so that's indication that maybe it's okay to take a sell. Again, I'm not a professional financial advisor. I'm not advising anyone to take any kind of trades or use their money in any kind of way when it comes to trading. Everyone's responsible for their own funds and how they choose to use it. This is just a video of me showing how I'm trading this pair, what I'm looking for, and how I would have gotten into the market. And I hope that this helps you as well. Until next time.